trading and trade setups. Components of a trading system. The first thing to consider is that you must have a reason for entering the market. Essentially, this involves 1. A setup, and in this case will include understanding where the level count is and what your assessment of true trend direction is going to be. 2. There must be a signal present for entering or staying out. The signals are 1. A stop hunt, usually in the form of a pin formation to the high or the low. 2. The development of W or M. Once you understand how the market is structured, there are really only 4 trades that you should be looking for. These trades are better than 90% accurate and can provide enormous success. When looking for the setups, it is important that the setups are clear to you and well defined. If they do not present themselves, then the object of the exercise is to move on and come back tomorrow. So when you turn up to the office every day, the general plan will be to 1. Identify the peak formation high or low in the weekly views. 2. Identify setups within this context, specifically looking for the most pristine setups where there is maximum opportunity for scaling in heavily and trading with high lot sizes without being concerned about losses because of the size of your stop loss and the confidence you have in the setup. Rules to profit. 1. Stop trading every day. 2. Show up every day, but if there is no setup, then there is no trade. 3. Learn to become highly selective. 4. Trading hours should be from the end of the Asian session and into the London Open for 4 hours. Then take a break. Then look for reversal setups at the opening of the US session for 2 to 4 hours. 5. Always enter positions in their consolidation levels where possible. This should be done when there have been a number of signals or triggers at a time when you believe the HOD or LOD has been or is forming. If you take trades after price has begun moving, then you are effectively chasing the trade, which has a negative effect on the size of your stop loss, and therefore the size of your trade and therefore profitability. 6. Ensure that you only trade on the basis of closed candles, preferably with multiple confirmations. 7. Only take trades at the peak formation highs and lows on the intraday cycle. This will be an even stronger signal if it also lines up with a peak formation high or low in the 3-day cycle. 8. Rather than aiming to make many pips per day to achieve your income targets, use a method which is highly reliable and ramp up your contract size. Why did we become traders? For time, freedom, and leverage. But because we sucked out or we lost sight of what we were supposed to be doing. Because you are trying to be highly selective, you don't have to be in front of your computer all the time. Instead, be selective and therefore more focused on what you're looking for. When you're learning, aim to make 50 pips per day. Remember, if you make 50 pips per day and are trading 1 lot, you will make $500, and if you are trading 10 lots, you will make $5,000. But if you make 50 pips per day and are trading 50 lots, you make $25,000. If you are confident with your setups and your level of accuracy, you can afford to trade heavily. Most people only trade smaller sizes because they are only guessing at the direction the trade is going to travel in. Fractional disparity. Looking at a collection of 1-hour charts allows you to examine what level each of the pairs is in and to understand interactions between the pairs. For example, 1. Consider the commodities pairs, AUD, CAD, and as they get to level 3 they will be choppy. 2. At the same time the EUR, GBP and CHF will be at level 2. 3. So while they are rising toward level 3 and the commodity pairs are holding their crosses will be handled. 4. So if AUD goes to level 3 and is in a choppy period, it means that AUD EUR, AUD JPY, AUD CHF are being worked. These could be better options to look for a clean setup. These observations are not essential for understanding this model or for making a profit. But it can explain why you might sometimes take a trade with reasonable criteria and it doesn't seem to move. At these times, you will often be able to observe the movement in the cross pairs. Also, it can give you an edge if you are trading one pair, For example, Euro USD, and it drops rapidly, perhaps not providing an entry opportunity. The expectation then will be that it will take 1 to 2 candles for this to have a ripple effect into one of its cross pairs, for example EUR, GBP. Scanning view. Use a 1-hourly chart to quickly scan a number of currencies so that you can ascertain what level you are at in the 3-day cycle and what your expectations are for the next intraday cycle. The pairs that routinely reviews are EUR-USD, EUR-CHF, EUR-JPY, GBP-USD, GBP-CHF, GBP-JPY, AUD-USD, AUD-CHF, AUD-JPY. This provides a view of the majors along with their crosses. You can set up an intraday directional matrix which aims to cover the necessary review data quickly before you start scanning for specific setups. The matrix would include the following data. Please see the table on the screen. Go through each of the pairs you are scanning, and cross off those that do not seem interesting. The others move on to more details intraday analysis. Putting the chart together. The primary object of this exercise is to decide what pairs you are going to trade. So you are going to need to ask yourself a number of questions when you assess each chart. Some essential questions are: 1. What level are we in? Examine the 60 minutes and 15 minutes chart. From this, you can make an assessment about whether or not you think the pair is ripe for a setup that you would like to trade, and would therefore begin to. 2. What day of the week is it? This can help to determine what your profit targets for the day should be. If it is Sunday or Monday, then perhaps aiming for 40 or 50 pip will suffice. However, if it is Wednesday or Thursday and if the midweek reversal has been identified, then it may be more reasonable to convert the spot trade to a swing trade. 3. What has happened in the last 3 days? Again, this provides further information about where price has come from and where you are in the cycle. Remember the weekly cycle and where you are in it. This has ramifications for the type of trade that is likely and the targets that might be possible. 4. Is a straightaway possible? So after you have asked these questions, you need to make an assessment about where you think the market is going and how you intend to take advantage of this. Look for strike zones. A strike zone is an area where price will find intraday support or resistance. It therefore becomes a place where there are possible setups and exits. They tend to be areas where there are multiple things coming together, providing a confluence of signals. So the things to look for to form a strike zone are: 1. Identifying if the Asian range is less than 50 pip. 2. What is the count? What level are you at? 3. Has there been a quick move out of the box, and were there 3 swipes? 4. Is there a significant pivot point near this price? 5. Has there been sideways price movement for 30 to 90 minutes following the first strike? 6. Has the ADR being hit? 7. Has yesterday's high or low been worked? 8. Is there an M or W pattern visible? 9. Is there a half Batman pattern visible? 10. Is there evidence in a straightaway pattern? 11. Is there an M or W on the TDI subgraph? 12. Can you identify shark spin formation? 13. Has the RSI crossed a signal line? 14. Is there support or resistance identified from one of the EMAs? 15. Are there reversal candles coinciding with these patterns, including RRT, star formations, hammers, and spike candles? A suggested routine. The first thing you should do when you come to the office is check the news. The best place to do this is at Forex Factory. Be aware that news disrupt the technicals and should be avoided while learning. Also be aware news can be used to help the achieve their targets. It is better to avoid being in a trade while there is news on the horizon, though once you're more experienced you'll be able to identify news setups. Having checked the news, you should 1. Avoid trading non-farm payroll at all. 2. Avoid trading when the Fed chair speech is running. As a trader, your job is to identify the condition and apply the appropriate action.